Okay, welcome everyone. On today's show, we will be talking about the S&P is still running strong, 8 weeks and counting. We've got a new section for you today. What's all the buzz about? And today we're talking about saving during inflation, which is really going to be an important topic for us this week, as we'll give you some news that's going on in markets in motion. It's going to be a little bit surprising, but kind of ties right into saving during inflation. Excuse me, that's exactly what I was kind of alluding to, was that
Mhm.
those meeting minutes um, suggested a rate hike, which will kind of lead into our further conversation in the Wealth Wisdom workshop today about inflation and our finances. All right, so this week,
Mhm.
let's see, key economic data. We've got the Case-Shiller Home Price Index and Consumer Confidence on Tuesday. Thursday, we'll get weekly jobless claims and new home sales and durable goods. And Friday, we get GDP, the gross domestic product, as well as personal consumption and expenditures. Our big people reporting earnings this week will be Marvel Technology and Salesforce on Wednesday. And Thursday, we've got Costco and Dell Technologies. So that will wrap up kind of our markets in motion, and we'll take our deeper dive in our next segment, Finance in Focus.
So on the corporate side of thing, Meta layoffs are beginning, and it's targeting 8,000 roles globally. So a big layoff inside of Meta. Part of Meta's ongoing cost discipline cycle as AI capex rises. Signals continued efficiency despite strong revenue trends. And it could support more margins, but raises questions about long-term staffing for AI initiatives. So it's an ongoing battle between what's going on with AI and with Meta and kind of leading to some layoffs within that company. And then with Walmart, we got customers rationing fuel as Iran hits their wallet. So kind of part of that wider scale conversation of why expenses are high right now. And then consumer strain showing up in discretionary categories. And Walmart says it will hold prices steady, even though they're getting margin pressure risk right now. So um, AMD boosts CPU production with Taiwanese partners. That's driven by unexpectedly strong global demand, and that reinforces semiconductor supply tightness and AI related computer needs. And we got JP Morgan offloading $4 billion in private equity linked loans. Indicates cooling in PI deal activity and tighter credit conditions as well. And banks reducing exposure to illiquid assets amid higher rates as well. So a lot going on. I kind of let markets dive a little bit deeper into some of that stuff.
Sure. Yep. So now let's kind of switch over to the Iran conflict and our
Hmm.
ever and never ending story of geopolitics and energy, which is going to be with us for a while.
Yeah. Yeah, 1,000%.
So the Senate advanced their war powers resolution, trying to limit further Iran strikes. Of course, there's a lot of pushback on that going forward through Congress. But it signals that Congress is pushing back on some of this expanded military action, but it's also adding a lot of complexity to the U.S.'s strategy. As we said, the U.S. and Iran say they're getting a little closer um, to the discussion about this uranium and opening the strait, but they still got some sticking points there. So, of course, any progress could ease those energy markets, but their core issues remain unresolved. So they're still beefing over something. Who knows? Um, Gulf states rejects Iran's claims of control over the strait. So I'm not sure how we kind of reject their control when they are making the money and letting people through. Um, Kind of they do seem like they have control. Um,
Hmm.
and now they're even trying to come up with Iran is preparing for an alternative revenue channel amid sanctions and these stalled talks. So they're still working in the background on how they're going to get around and continue to collect money. We are seeing a little bit of movement through the strait. So two Chinese tankers, approximately 4 million barrels, actually got through the strait last week, and India says they're preparing to send some tankers through the strait as well. So there's some selective movement through the strait, it looks like. But we'll kind of see what's going on there. All right, and then Jeffrey's off talking about the economy here and central banks.
Yeah. And if it's one thing you've kind of learned from this podcast, the last couple, labor and energy costs are high. And that's kind of putting strain on the profits realized by U.S. small businesses. And that Middle East conflict is pushing fuel and input prices higher and higher. So that margin pressure could slow down hiring and investment from those small businesses. And then Trump says he's going to allow President Trump is going to say he's going to allow Walsh to do what he wants on rates, um, and kind of markets are parsing for signals of political influence on monetary policy. So we'll see what that leads into as Walsh kind of takes control there. And then Walsh's double dovish lean challenged by rising inflation and deficit. It kind of sets up a difficult policy environment for incoming Fed leadership as well. So it's going to be an interesting dynamic within the Fed as Walsh takes control. So,
Yeah, I mean, basically the data isn't there to support lowering rates, um,
hmm
and so it's kind of going against his desires there.
yeah,
All right. Our new section, what's all the buzz about? So we're going to drill down on AI and technology, tell you a few things that are going on, give you some AI and tech news, and then share with you how some companies are creatively using AI out here in the
hmm
world. So, Jeff, lead us off with some of the AI and tech news that we're seeing coming through.
yeah. So Silicon Valley is pushing to block Trump's AI order, and their concerns is that it could slow down innovation or pose heavy compliance burdens. It kind of sets up a regulatory showdown for major with major implications for AI development. At least that's how they view it. So then you also got the Pentagon is testing AI models as alternatives to Anthropic's Claude. Defense sector they're seeking more secure, specialized large language models. That could accelerate domestic AI model diversification too. So a lot of growth is trying to happen inside the AI world. And then the AMD CEO, CPU demand surges the last 5 years. So the demand for those CPUs is up and up and up. And this reinforces long run compute capacity shortage narrative. And supports the bullish semiconductor capex outlook. So um, AI is still growing is the biggest thing to take from that. And there's a lot of behind the scenes conversations happening on how that growth should be happening. So.
Yeah, what's interesting, as you pointed out, is the regulatory shutdown and the compliance piece
Mhm.
because um Republican administrations as a whole are against regulations and compliance. So it's kind of
Exactly.
interesting. Just kind of makes you wonder why the White House would be trying to enforce regulatory things.
Mhm.
So, always a silver lining. Okay, all right. So let's kick off with how beyond Silicon Valley, get out of there, how AI is shaping how people are using it. So first up, college football. So former LSU and Notre Dame coach Brian Kelly says he's using AI tools like Anthropic's Claude to prep for his next coaching job. So he's using AI to run scenarios, rehearse his answers, and do due diligence before interviews. So um, that's not a bad idea for our youth who are out here looking for jobs. Maybe you can use AI to anticipate some of the questions and kind of practice those.
Mhm.
Um, which leads into our message from NVIDIA's CEO with his message to new grads. He is saying, "Run, don't walk towards AI." So at Carnegie Mellon, he told the graduates that AI is a once in a generation opportunity that will reshape everything from manufacturing to energy. So the translation here is the AI boom isn't just about software; it's about the physical economy that supports it. So
Mhm.
again, the 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 opportunity here is not AI as a software. It's the companies and how they utilize AI. And so getting ahead of those is where you're going to find your opportunity.
Exactly. And then kind of leading right off of that, an example of one of those companies is PayPal, who's kind of experiencing a major identity shift. As they say, it's becoming a technology company again with AI at the center of the turnaround. And this includes a new AI transformation team and a restructuring plan tied to more than $1.5 billion in savings. And for us, as far as people that use PayPal as consumers, what this means is faster and more automated payments is what they're trying to accomplish there. And different workers, AI is arriving alongside job cuts, and that's a trend we're seeing across corporate America as a whole. So um, it's kind of a balance to it. And then Disney is also looking to get into the action. CEO Josh D. Amaro says AI will help take the stress out of planning and planning a Disney trip from booking to real time itinerary decisions. And the balance they're trying to strike is more convenience without losing the human creativity that defines the Disney experience. So they're trying to make that trip as easy as possible to book, plan, schedule things, and all that kind of thing without taking out that human experience that kind of makes what Disney World Disney World. So, like I said, this is a balance that a lot of companies are trying to find within the AI world.
Sure. Yeah. Exactly. Yeah. Because like I said, you wanted to plan the trip, but you also want to participate in kind of looking at the
Exactly.
hotels and the pictures and all that
Yeah,
fun stuff. So
exactly. You still want to be your trip. So,
exactly, exactly,
okay.
exactly. All right. So healthcare is getting into the act too, as you can imagine. NBC is reporting that nearly 2/3 of U.S. doctors now use some software called Open Evidence, which is an AI powered medical search tool. It helps surface research, answer critical clinical questions, and helps the doctors kind of speed up their decision making. But doctors also warn about some privacy risks, and they don't want their trainees to over rely on the product, which makes sense. You got to kind of learn this stuff by doing and surfacing the patient. Bottom
Mhm.
line is AI is already in the exam room, and patients don't even realize it. And finally, from a mental health perspective, which is always big, the National Academy of Medicine says millions are turning to AI chatbots for emotional support. They can help people point to resources, but they can also reinforce harmful thoughts or mishandle the crises. So while AI can expand access, it cannot replace that human connection, especially for teens and vulnerable users. So again, I think the phrase here is, don't bypass those professionals. With AI, they can still do things that the computer just can't pick up on. So
Mhm.
bottom line here, AI is moving really quickly. As you can see, it's in sports, it's in finance, it's in medicine, it's in entertainment, it's in our everyday life. The common thread this week, the technology is becoming more personal, more embedded, and more consequential. So that'll wrap up this section, and we'll be right back with the Wealth Wisdom Workshop.
Welcome, everybody, to today's Wealth Wisdom Workshop. I'm Jeffrey, and I'm here with my partner in financial empowerment, Marcus. So, today we're diving into a topic that affects every single one of us, and that's saving money in a world where inflation is always shifting.
That's right. So you may have heard that inflation is cooling down or that the economy is getting back on track. But saving is not seasonal. It's not something you do only when the economy is shaky. But saving is a habit. It's a muscle. And today we're going to show you how to strengthen that muscle.
Yeah. So, what we're going to do today, we're going to break down three practical strategies that can help you save effectively, even when inflation is high. So, let's go ahead and jump right in. And let's start us off with the first strategy is automating your savings. And that first rule is saving is simple. Make sure your savings grow consistently. Add the best way to do that is through automation, through payroll deductions or automatic transfers. You remove the guesswork and the temptation, and your money moves before you even see it. Then let me tell you a little bit about Samantha. So Samantha was a client who earned a solid salary, but she could never figure out why she wasn't saving. Every month she said, "I don't know where my money went." Last minute trips, she was going shopping sprees, and by the end of the month, whatever was left in her checking account, she spent it. Um, yeah, Samantha was going through it for a little bit. And then the missing link, she only had one bank account, and that was just a checking account. She had no separation, no structure to her financial situation. Then here's what changed everything. She set up automatic contributions from her paycheck into a separate savings account. And that allowed her to build up that savings without even thinking about it at the end of the day. And so the takeaway from this is automate your savings, keep them in a dedicated account, and let the consistency do the heavy lifting. Automation protects your purchasing power, and especially during inflation. So automation is big right now.
Yep. And Jeffrey, that's a great story because it shows how a small system actually resulted in a big result for her. That
Hmm.
was great. Strategy 2 is something we have pounded, um, on you all's heads for the last 3 or 4 weeks, that emergency fund. And too many people overlook it until it's too late. So during low inflation, you should actually be increasing your savings. So ideally by at least 10% of your income. So that when inflation rises, you can still afford the same goods and services. So let's look at a real example. So when COVID-19 hit, many families went from two incomes to one almost overnight. One parent had to stay home to homeschool the kids. Now, here's the difference. Families with an emergency fund were able to maintain their budget, even with less income. Families without an emergency fund often had to move in with relatives, take on debt, or even file bankruptcy. That's how critical this is. So, our recommendation, generally speaking, is to build an emergency fund that covers at least 6 months of essential and fixed expenses. So inflation just doesn't raise prices, it raises the stakes. Your emergency fund is your buffer, it's your safety net, and it's your peace of mind.
Hmm. And a very powerful tool for financial stability. And then kind of takes us into strategy three, um, which is especially important during high inflation periods, excuse me. And that is to minimize your use of debt and maximize your debt payments. And here's why. When inflation rises, interest rates rise too. That means carrying debt becomes more expensive. Every month you hold on to your credit card debt, you're paying more and saving less. And there's another layer to that too. Your credit score. If your credit score balance exceeds 30% of your credit limit or you miss payment, your score drops. Snowball begins rolling. A lower score means you pay for more loans, which means less money stays in your pocket for savings. So here are the rules of the road. Don't use your credit card unless you have the cash to pay it off. Stick to two credit cards. Always pay on time and avoid carrying balances. The money you save from avoiding high interest then can go straight into your emergency fund, and that's strengthening your financial foundation.
Yep. So as Jeffrey just said, debt drains your future, but savings secures it. So let's recap the three strategies that help you save effectively when inflation is unpredictable, as we are seeing right now. One, automate your savings. Two, adjust your emergency fund. And three, don't take on any new debt.
And then, so inflation may rise and fall, but your commitment to financial stability should stay steady. These strategies aren't complicated, they're consistent. Think of a system. Once installed, consistency is what builds wealth over time.
Yep. So thank you all for joining us today. We hope these tools are empowering you to increase your financial education as well as your financial future. Close us out, Jeffrey.
And until next time, stay wise, stay intentional, and keep building wealth with a purpose. And that's Jeffrey and Marcus today with
All right.
your
Everyone
financial.
have a great week.
Yeah, have a good one.